Richard, let me just start off with what you're expecting from the ECB. They've already raised interest rates twice. Some are saying that's a policy mistake. You're not expecting another move, are you?
No. Look, they certainly won't tighten, and I wouldn't have thought they'll ease either. I think the important thing, as has been the case with many central banks at the moment, is what they say in the statement and what their bias is.
Yeah, what do you think they will say in the statement? Because the ECB in Europe right now needs a lot of help.
Europe needs serious structural help. The ECB doesn't view it as their role to provide that, though. So I think they'll be slightly dovish, perhaps, but not indicative of any quick or early rate cuts.
And what about this anticipation of maybe an interest rate cut coming from the ECB? Do you think that has any credibility?
Not for the next couple of months, I wouldn't have thought. I mean, the problem for the ECB, I think, is the core in Europe is still doing fine. Consumer prices for the whole of Europe are still somewhat elevated. There's not conditions under which the ECB has typically cut. In 2008, they only eased really after the economies in Europe really started to decelerate rapidly, and this time the slowdown looks modest in those core economies.
Oh, that's interesting. What about the euro itself? We're looking at 140 versus the US dollar. Some have been predicting that we could see parity. That never happened so far in about, 18 months. But how much more weakness are you pricing in?
Actually, not a lot. I think that generally the euro is going to go up for a couple of reasons. One is, I mean, the core in Europe is still doing fine, and the ECB is providing enough liquidity, I think, to sustain the contagion among the peripheral economies. Interest rates in Europe are reasonably high relative to the US, actually.
Yes, yeah.
And that's important from a carry perspective, particularly as sovereign wealth managers look for long-term returns. And thirdly, I think the ECB is a credible inflation manager, and with such long-term money driving currencies now, I think that makes Europe stand out from the US.
Yeah, we can't talk about Europe and we can't talk about currencies, of course, without talking about what happened with the Swiss franc. And you've got some crystal ball somewhere, don't you? Because you actually predicted this move, some sort of intervention from the central government?
I think the significant thing about the Swiss franc was the Swiss were telling you the currency was becoming much more important in terms of up their policy hierarchy, if you like. And let's face it, if you think about Hong Kong runs a currency peg, authorities can achieve any currency outcome they like. The question is, what are they willing to do to achieve it?
Yeah.
All right? And the Swiss were saying our economy is not going to function with Euro-Swiss at these levels. The currency becomes the only target, and that's where we are. So, and I think you need to believe them. I think when a central bank says we will buy unlimited amounts at this level, that's what they'll do.
Unlimited amounts.
Unlimited amounts.
Wow. Okay. So what about Japan then? Because they talk down their currencies a lot.
Yeah, I think Japan's definitely further away from that process. I think their economy. I mean, I guess where their currency is not that unusual from a historical perspective in real terms. So I don't think they're in a Swiss situation. What the Swiss move does, though, is further highlight. Where do I put my cash? I put my money in Asia, I put my money in the commodity currencies, because the concept of safe havens is being redefined.
Yeah, and is that because you're expecting further weakness in the US dollar itself? Considering
there's no question on a
Obama?
Structural view the US dollar is going down, and it's going down a lot against pretty much everything. And the only reason it hasn't gone down a lot already is because you have these non-market players in currency markets now allocating money in ways which the private sector would not.